Hi there, good afternoon. You're watching Closing Trades on ET Now. I am Snehi Shah, and let's take you through what the entire trading session has looked like, and more importantly, what should the trading strategy be in the last lap of the trading day. Let's first take a look at what the Nifty is doing and continues to be range bound, so that Sensex expiry pressure is something that has continued to weigh on the market today. About 10% uptick coming in on the Nifty 50. We're above the 24,350 mark for now, at least 24,370. And if you take a look at the chart that we're seeing, that's the intraday chart of the Nifty, the number of times it slipped into the red versus the kind of jump that we saw, 24,477. That's the kind of uptick that we've seen. And from there, yes, it's been a very sharp cool off from the day's highest point. Nonetheless, we're still in the green by about 0.2%. Sensex is absolutely flat. You have the broader end of the market, however, that is showing a wonderful move yet again today, because you have a 1% uptick on the Nifty small cap index and similar 1.1% uptick on the Nifty mid cap space. So that continues to do very well. The Nifty 100 also holding up well, 0.2% over there. India VIX also nothing to worry about on that front. On the sectoral front, some strength has been seen in names like Realty, Pharma, and they've edged back to the green. But you do have FMCG, IT, and PSU Bank. They continue to be in the red, with the biggest losses coming in on FMCG. 0.6% lower, led lower by Godrej Consumer on the back of cautious management commentary, wherein they're expecting a margin pressure in the first half of FY27. That's led GCPL lower, and overall the entire FMCG index too. On the flip side, Nifty Defense seeing some very good gains. That's been gaining. It's a one-way move for Nifty Defense in today's trade. 7.25% uptick on Paras Defense. Astra Micro is 6.5% higher. Bharat Forge 4.25% higher over there too. MTAR Tech, Zentech, Mishra Dhatu, HAL, BDL. All of them are looking very good on the Nifty Defense front. This followed by auto, energy, media, metal, finance, banks, pharma, and realty. That's the pecking order of the gainers from the most to least gains that we're seeing. Realty too, the least gaining sector, is 0.2% higher. But yes, PSU banks, IT, and FMCG continue to be in the red. While this is the market construct as we speak, let's get a better understanding on where the markets are headed on the technicals. What should your trading strategy be at this hour? And for that, we have Mr. Jay Bala from Cash the Chaos, who's joining us on the show. Jay, first of all, overall, let's not talk about the technicals. Pardon me for that. Let's just overall take a look at what the market structure has been. Give us a sense of how you have been reading the market moves, and how sensitive do you still believe the markets are towards everything that's happening geopolitically? Because just yesterday we had comments coming in from agencies saying that the US and India could be drawing closer to US and Iran, pardon me, could be drawing closer to a peace deal, and the market reacted rather sharply to that. How sensitive do you think the Indian market is to geopolitical moves now?
Hi, Snehi. Good to have you on your show. See, the markets, not just India, the overall markets are very sensitive to the geopolitical events, and the geopolitical sensitivity is reflected in crude prices. The markets over the last several weeks, beginning from the early part of February, it's been risk assets on one side, crude, US 10-year, and dollar on the other side. So it's not surprising that markets have been reacting positively. My sense is that I've been maintaining a view that the recent high, the crude saw about 119 and change. I'm talking about WTI crude, not Brent. That's a significant top, and I've been maintaining for the past few weeks. We don't speak often, but I've been maintaining for the past several weeks that crude has stopped and it's set to crash to about $64. So basically, the markets, I get sense from the cross assets signal that the risk premium that's been built for the geopolitical risk, that'll deflate, and the markets are heading higher. And that has been my view since the beginning of April, second week of April 2025. I've been maintaining that Nifty is headed for 29,000 to 30,000 from a medium to long term perspective. And the Iran war, is just was an interruption. It does not change the trend. I was anticipating the decline to be about 23,500 on the Nifty. But this, Iran war incident just pushed the markets a little lower to about 21,700 and change, 22,100. So it's not dented the medium-term uptrend. I'm still expecting the markets to be about 29,000 plus around September, October 2026.
Okay, so that is your view on the market overall. Jay, also talk to us about the kind of sector rotation that we're seeing in the market. What are some of the sectors that you are bullish on right now, and which would be the ones that you are avoiding for the time being?
Yeah, I'm very bullish on the BSE capital goods sector. So I'm anticipating the capital goods, BSE capital goods to be about 99,000 in a few months time frame, and I'm bullish on the realty sector too. I believe the realty sector has bottomed and it's heading for fresh record highs closer to the September to 2024 levels where it was, and I'm also anticipating some turnaround to come through for IT. It's got a little bit of downside left, and so IT, I'm also anticipating that to be a turnaround. The sector I've been avoiding since 2024 has been FMCG. Even that is seeing a counter trend bounce, in my opinion. I anticipate the Nifty FMCG index to rally to about 58,000, but I'm still treating that as a counter trend bounce, not as a change of trend. So that's the sector I'm avoiding.
That's quite interesting. Jay, our viewers would want to know what's the upside target that you have for the Nifty and what's the timeline for that?
Hi, sure. I'm anticipating the Nifty to be about 29,000 to 30,000 by the summer of 2026. So that's about between August to September 2026. I would anticipate the Nifty to be around that levels. So once crude prices starts deflating, which is I believe it has already started to do, the secondary high of 110 and change registered last week. I think that's an important peak for the crude prices. And I believe in the next few weeks to a couple of months, I anticipate crude to crash to about $64.
Wow, that's quite a statement. Not just you anticipating crude to crash all the way to $64, if I heard that correctly, but you also anticipate that the Nifty is going to just in 2 months hit 29 to 30,000. Very interesting there, Bala. Firstly, I want to understand what do you think is going to lead the Nifty higher? Because, you know, while we have seen performance from banks come by, it's not been in a linear fashion. And one of the other very high-weighted sectors, IT, has only had a very feeble bounce.
That's right. You nail it right, Aisha. So for so far, Reliance hasn't participated. So that's going to be the one that's going to give some lift, but it may not be the biggest outperformer. But when Reliance moves, it has got a lot of weight on the Nifty. So it's always good to have Reliance providing the tailwind. That way, the market structure for the bulls is very encouraging. So IT, like you pointed out, it's been the laggard and the weakness. And I think it's going to be a turnaround candidate. It's not yet, but it's very close to. I would anticipate the Nifty IT index to clock somewhere about 26,000 and then reverse. So we're just watching for this reversal to happen. We're not getting bullish yet, but anticipate to get bullish. And as I said earlier, I'm very bullish on the capital goods space. So your power stocks, your defense stocks, and other names related within the capital goods space, they're going to be powering the market. And look at your Thermaxis, Crompton Gives Power, and all those stocks are going to be doing. And today we're seeing Bharat Forge surge to fresh record highs. I've been bullish on Bharat Forge since middle of last year, so I still continue to be bullish on it. So defense, Bharat Forge happens to be on the defense and the capital goods space, so it's going to be doing pretty well.
Interesting. So, Bala, let's pick it up one by one. Firstly, on Reliance, what's the 1 and 2 month and 3 month price target?
So the very near term is a bit ambivalent, but from a greater than 2 months plus time frame, I anticipate Reliance to be about 1,700 to 1,750. I don't think Reliance is dropping below 1,300. So the fact that the stock is trading about 1,440 is very important. So what was the second question?
On Reliance, but I want to talk about IT as well next, Bala, because, you know, like we were earlier discussing, IT has really sort of been the, you know, sore point all through calendar year 2025. Now, what do you read on the charts? Does it seem like IT is going to contribute with as much gusto? Because, I mean, if you're talking at higher levels for the Nifty, IT will also have to see some amount of contribution at least, and not just from the mid-cap end, but the large-cap IT names as well.
That's right. The underperformance of IT is not just limited to India. If you look at the US software sector, which is tracked by the ETF IGV, that's also been underperforming. So that's mostly been because of the Anthropic scare. And price structure-wise, recent low is, the Nifty IT index needs a break of the recent April low. Once that's done, I think the price structure would be complete. So the underperformance the sector has exhibited over the last year, that's going to be reversed, in my opinion. But this is an anticipation, like I said. We don't want to preempt the market. We want the confirmation to come through from the market. So once that is done, we can allocate to the IT sector. First, I would anticipate the large caps to signal that, but later on, I would expect the mid cap IT to outperform the large caps. But the bottoming process is still on. It's still not bottom, but I anticipate it to get put in the bottom around 26,000 Nifty IT index.
Bala, what about banks? Because the street still seems very split and divided. While they may have come off from their March lows, especially the large private banking names, but on a longer haul, people are only bullish on the one name, SBI. What are the charts, though, telling you?
Yeah, the PSU banks, they have delivered their job, and until July 2025, and rather even early part of 2026, they have taken the markets higher. And I believe the private sector banks are the ones that's going to take over the baton, and expect resurgence to come back in the form of ICICI Bank and Axis Bank. But I don't anticipate this to be the leader in this phase of the run. They will participate, but I don't anticipate it to be the leader. So the weight is going to come from somewhere else. But some contribution is going to definitely come from private sector banks.
Interesting. Bala, amidst this entire piece and the churn that we are seeing towards infra and capex heavy names, I want to understand what role will L&T play here?
Yeah, see, like I said, I'm bullish on the real estate space. So once real estate is sensed in the markets as having turned around, then the infra space will also get a lift because stocks like Larsen, Cements, stocks like Shree Cements, Ambuja Cements, they're also likely to get a tailwind because of the turnaround in the real estate sector. So I anticipate Larsen to be trading somewhere about 4,600 to 4,800 in the next 1 to 2 months time frame. It's in the short term is quite bullish. It just needs a very near term pullback. Once that's done, anticipate fresh 52-week highs and fresh record highs for the stock.
You talked about realty, and I understand the catch-up that is in the pipeline for real estate. The underperformance all through calendar year 2025, and now from the March lows, of course, realty has already begun quite a fair bit of moves. But do you see a more broad-based move, or do you think as the real estate sector goes higher, it will perhaps narrow down to a fewer names?
No, I think it's going to be a much broad-based move. The leadership is going to be probably coming from DLF, Phoenix Mills, and other frontline stocks. But it's going to be quite broad-based. Without that, the fresh record highs are unlikely, and some of them are likely to be lagging behind the leaders. But it's very likely to be a broad-based participant. If you look at something like Anantraj, it's also in the data space. So that's going to be one of interesting candidate. They're going to see a sharp rise. Real estate plus the data side, the data for NVIDIAs and all those things. So that's going to be a very interesting stock there.
You've given your crude target at $64, significant downside from where it is. In fact, it's almost half of where the crude prices are right now. What happens to some of the crude-linked plays? I'm talking about rubber stocks, aviation, OMCs, or oil companies, both on the upstream and downstream side. How would you be looking at those?
That's right. Very, very important point. I anticipate tire stocks to do pretty well. I like TVS Street Chakra, and I'm anticipating fresh record highs past 4,100. And I would anticipate HPCL, BPCL to also be the beneficiaries of this. And ONGC has already been doing pretty okay. And from a slightly longer term perspective, I anticipate the December low of $54 on WTI crude to get broken. So this is I think we already had a confirmation yesterday by WTI breaking below 92. It has signaled that the top is already in. So we're going to, and I mentioned this in another business channel a couple of weeks ago, that the real peace deal is around the corner. That's the interpretation I've got from the charts of crude.
Okay, that's an interesting point you make over there. So that's your level for WTI as well. But Jay, also talk to us about the metal space. We've seen a lot of volatility over there. There have been weeks where the Nifty metal has outshone the rest of the market. And then immediately after that, we've seen some extreme pressure as well. How are you looking at some of the metal names? What stands out? Would you be looking at ferrous, non-ferrous? Which basket looks better on the charts?
Yeah, I'm a bit cautious on the metal space. Not that I'm turning bearish. It's either going to pull back and make a very big move, or it's going to stall here and then turn around. I'm watching it very closely. I've been bullish on the metals names since September of last year. If it does start to fire, I would anticipate it to be the ferrous stocks to take the markets higher. So bit of caution here, but it can go either way. So I'm deciding. I'm more neutral. I think it's going to get resolved bullishly, but I would want the markets to confirm that.
Well, I'm curious to know what your view is on some of the defense names. Not that they corrected a fair bit in any case in the March weakness, but more so they actually were, are turning out to be one of those very steady compounding stories.
Yeah. I mean, I'm quite bullish on the defense space, and if you can even be bullish on there's a grow defense ETF that's looking quite bullish. I would anticipate a much larger move come through for the Nifty Defense Index. Somewhere I wouldn't be surprised if the defense index were trading at about 12,000 odds, and say from a 3 months perspective. My top pick there is Bharat Forge, and I anticipate it to be about 2,400 in a few months time frame. And it's a bit. I mean, I've been bullish for quite some time in it, and it's come to where it is, and it's been moving on expected lines. So and even you can look at something like data patterns and other stocks within the space. But as a basket, you can even be bullish on grow defense ETF, which gives a broad exposure to the sector.
Okay, and while that's your view on defense, Jay, also talk to us about a heavyweight sector, that's FMCG. What kind of contribution do you think the FMCG as a basket could play towards this 30,000 Nifty target that you're spotting in the next couple of months? And also, I ask you this because as a sector, the kind of weightage it has in the Nifty versus the kind of moves that we've seen in FMCG is absolutely flat. So what is your outlook on the charts for this basket?
Yeah, so within the FMCG space, I would say Nestle and Dabur and Marico are outliers. The frontline names, ITCs, Britannia, and HLL, I believe they are probably on a counter-trend rally. So, they will contribute, but I don't think they have strength to contribute beyond 58,000 on the Nifty FMCG index. It's about 51,000 odds here. But that itself is a sizable rally, more than 12% from here. So I expect them to be leaders, but pockets of outliers like Marico and Nestle, which are doing much better than the frontline names. So it can be a trading play. I don't believe they could be an investment play within the sector here.
To know what happens to pharma here, the index has delivered about a 1 month return of 7.5%, and I think 3 month return of 7% thereabouts from the March lows. What next for pharma stocks?
Yeah, the pharma is breaking out, and the problem is pharma is lightweight and it doesn't contribute much for the Nifty. At least on the last check, there weren't any big constituents on the Nifty that could take the Nifty much higher on a single handle, but it is breaking out. It's breaking out after a very long time, and it's been at the mercy of Trump's whims and fancy. And this breakout is very welcome, and I had turned bullish on the sector last August, and I would say with a lot of disappointment, it just went sideways and didn't deliver much. But the breakout to fresh 52-week highs is very encouraging. I would anticipate Nifty Pharma to be trading at about 27,000 from a 3 months time frame, from 24,000 at current levels. So frontline, I like Aurobindo Pharma and Glenmark within this space.
Interesting. Okay, Bala, great to be chatting with you, and thank you so much for your views and time as always.
Thank you.